This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. My guest today is Van Tharp, a repeat guest to this show. Originally featured in Jack Schwager's Market Wizards series. A prolific author and some really great historical trading insights. Every time I talk to Van, he tells me something I don't know or I did not know. I love that. I hope you enjoy this conversation with Van Tharp. So Van, in 2013, they awarded the Nobel Prize to Eugene Fama and Robert Shiller, which at first blush seems contradictory, maybe even several years later seems contradictory. How did you feel about that when you, I think I know somewhere where you're going to go, but how did you feel when you have the one leader of the efficient market camp and then you have a behavioralist? How did you feel when that was announced?
I think those guys do what they're going to do. I have a long-standing theory on what happens to Nobel Prizes, which is that Nobel Prize in economics is awarded to the person who comes up with some theory that supports the status quo.
Expand.
Which allows people in the market to say, yeah, this is how the market works. So you get anything from efficient portfolio theory to who knows what. It sounds like a good thing. I have all sorts of... I'm not an economist anyway, but I have all sorts of unique things in the market. And you have this great approach that you've been talking about trend following for a long time in a year. But neither one of us will ever win Nobel Prizes in economics because we don't do anything to support the status quo.
That's a great point. I think the way you've just answered that, you don't think much of something like the efficient market theory. I mean, obviously the techniques and the way that you train people, why would anybody show up to learn from you if the efficient market theory was valid?
Yeah, correct. There's nothing to do.
Let me keep pressing you on that, though. So when you hear these things, I think the audience can hear in your voice already, hey, this is just not important. You shouldn't be thinking about it. But I think for as much energy that the status quo does use to propagate things like the efficient market theory, I would love for you to kind of give some thoughts on that, because you've had a chance to be around not only yourself, but a lot of other traders that put that to shame.
All right, I'm going to move this in a slightly different direction, which is I have a workshop now on systems thinking. And the importance of systems thinking is, about 20% of the population can do it. And part of the reason you need to do it is we all have these models of the world which are basically made up. We have no clue about even something like the market, we have no clue what the market really is. So somebody might show you a chart and say, oh, that's the market. And you go, okay. And then you look at the assumptions behind it and you find it's a bar chart and it takes the open, high, low, close of a specific period of time. And if you were to look at the ticks on that, you might find they all distributed around a certain time, and maybe that's all in the top third of the bar, and then there was one tick that was way down that was the low of the day, or that period, and that was the low. And we've decided, okay, we're going to express all those ticks for that time period as a bar, and say that represents the market for that period of time. And then some people can't accept that, and they say, well, I need a candlestick, or maybe I need a line that goes through the bar, or I need some sort of indicator that tells me what the bar is really doing. In my opinion, all this stuff is made up. Because it's made up, you have to realize that so your map of the market is not the market. It's not the territory at all. You better hope it's useful, which means that the structure of your map is somewhat related to the market, because the more useful it is, the better, more effective you'll be as a trader. But people can make up all sorts of things and then assume it's real. Systems theory, I think, is really important, because systems theory realizes that the map is not the territory, that what we say something isn't that thing, and can shape its thinking around that.
So what does that leave us with?
Well, it leaves us with, I guess it's like my book, The Matrix. It says there's a matrix, it's all made up. If you understand that, then you can figure out what's useful and what's not useful for functioning in the matrix, reprogram yourself to be super efficient, and perhaps one day even go beyond the matrix.
So when I throw that initial question out at you about the Nobel Prize, it's just I'm digging through the disgust in your voice, where it's like, hey, all that stuff is baloney. It's just not important. Don't fixate. Don't stay there. Don't think about it.
It's somebody's beliefs. If you find it useful, great. If there's a way you can profit from it, great. I don't know how I can profit from it. I like to concentrate on useful things.
Let me dig in a little bit here when people approach you. So you have a track record of helping people that goes back decades. You are approached by new traders, I assume, all the time, professional traders, people with lots of experience. I'm sure it runs the gamut. When somebody first comes to you that perhaps is a bright person, maybe they're an engineer, a doctor, who knows, or they're just bright, they know what's going on, but they haven't been exposed to something like position sizing. Talk about from your perspective, what it's like to observe people that perhaps, as I said, the bright people, lots of experience, but they come into your world and you start making light bulbs go off for them. It's going to be an interesting thing to watch, because many of the topics in your world, very similar to my world, it's still not a natural way, or it's not a way that the system, the status quo, it's not a way for the status quo. It's not the way they typically educate people.
Well, I always say if it were easy to make money in the markets, then big money would make it very hard for you to even participate in the markets. You'd have to go through all sorts of tests and things. But since it's not easy to make money in the markets, they make it easy for you to join. That's what came up when you said that.
For example, your broker doesn't really have to do much due diligence to let you open an account. Really, it's like your name, rank, serial number, and some money, and that's it.
So let me explain what I've been doing over the years, and maybe a different perspective on what it is. So I've been modeling good traders and what they do. So I've modeled the process of trading, which is what we call the tasks of trading. I've modeled how to develop a system that fits you. I've modeled how to position size to meet your objectives. I've modeled what we call the infinite wealth factor. A lot of stuff about market type, because your system has to fit the market type in order for you to be able to make money. If it's market sideways and you're jumping in the market to go long all the time and nothing's happening, you're not going to make money. And if the market's going down and you're trying to go up, go long, you're not going to make money either. So all of those things factor in. When I'm looking at a new person, it's like there's a number of steps. They've got to learn the various models that we've done that work. In terms of, there's a bunch of beliefs that I call Tharp think, that's in the book Trading Beyond the Matrix, that are just useful, and those need to get into your neurology. You need to not just say, oh, I agree with them, but really get them in the point where they're in your muscles and you think, yes, this is the way things are. And you've also got to raise your consciousness enough so that once you know those models, you can actually follow them. And I guess that's our whole process that we do in the Super Trader program, which is making people, raising people's consciousness from, say, fear and greed to at least acceptance, where they can accept profits and accept losses when they come up.
Well, you've condensed that naturally, as you have to on a conversation like this. But let me go back to, for example, some of those stumbling blocks, the new trader. Why don't you speak to, perhaps, pick one or two of the typical biases that a new trader, perhaps a bright individual, walks in with that you need to help reprogram them?
The first thing is that they need to understand that they have to take total responsibility for what happens to them in the markets. It's very easy to think, there's some magic secret to making money in the markets. If you just find that secret, that's it. That's not the case at all. For example, I can give you a really good system. So I could teach you a really good system, and then you start trading it and maybe make 3 mistakes every 10 trades. If you're making 3 mistakes every 10 trades, you're trading at 70% efficiency. And let's say that trading system has an expectancy of 0.8 R, which means in 10 trades it's going to make 8 R. But let's say that 3 mistakes cost you 2 R each time. That means you've taken 8 R and turned it into 2 R, and that might mean you decide the system's no good, that you can't trade it, all sorts of things. You've got to get to a point where you understand that it's what you do that produces the results, including the mistakes. That's number one, beyond everything. And there's another level of that, which is your responses produce the thoughts you have. Your responses, you give meaning to everything. You give meaning to, if I say a particular word, you basically determine what that word means to you. And my guess is 10 people will hear this podcast and they'll all give a different interpretation to what I say. And you've got to accept responsibility. That's you doing that process. I think that's number one. That's right at the beginning of anything. If I don't have that, I don't have anything.
But when people understand your world, they don't have a different interpretation. It's just those that have not been exposed yet.
Not necessarily true. I could say, think of a dog. What do you picture when I say think of a dog?
My first dog, a big black Labrador.
Right. I was picturing my little Papillons that I have upstairs. Somebody else is picturing a German Shepherd. Somebody else is picturing their dog. Maybe somebody else is picturing the dog that just bit them. They're all giving a different meaning to the same word, dog.
Okay, but if let's say we changed it from dog to position sizing. Yes, there can be different ways that one can go about position sizing. But once everyone has the thrust or the understanding about what the different choices are, that's fairly concrete. Then it really just comes down to your personal risk appetite. So, I mean, I guess what I'm getting at is there are many elements of your world that it's kind of like once you get it, you're inside, you kind of get it. But then for new people, when they're first exposed, they really can have a differing understanding.
Well, sure. I mean, I actually coined the word position sizing because everybody was using the word money management at the time.
Me included.
Money management went from things like, how you manage your finances to, there were so many different connotations to that it was just off the charts. So I said, well, let's call this position sizing. So it gets down to the factor of how much. And then you look at, the outside world there of investors all think it's asset allocation. And that comes from the kind of studies which say if you look at a portfolio manager or a set of portfolio managers over a number of years, and you look at the variability of the performance, it's a function of how much is in bonds, how much is in cash, and how much is in stock. Well, that's my definition of position sizing. So even asset allocation is what's important becomes position sizing. Yeah, once you make sure people have the same meaning that you do, then you can begin to communicate.
I think there's a little backstory here. Can you give the backstory about how are you exposed, or when were you exposed to the how much question? How did that enter your life for the first time?
I think my second peak performance workshop was with Ed Secoto. We did a retreat in Hawaii And I had him present a couple of things. I think he presented the example of a coin flip where you are right, or maybe it was an example where it came up heads 75% of the time and tails 25% of the time, but you wanted what was the most critical factor in that. I don't remember the exact example, but it was something like that. And the question was, what was the most important factor in your trading? Of course, I said, well, it's you. And Ed goes, no, it's how much. I've been thinking about that ever since.
How long ago was that? Been thinking about it ever since?
Late 80s.
Late 80s.
So the late 80s was when we did that workshop together. I was, even before then, I was a turtle interviewee, and I got exposed to Bill Eckart's version of position sizing, which I thought was really genius.
During the interview process, even though you were not selected, you actually gathered that insight.
No, I think there was a question they asked me, which I had no idea what the answer was, and the question was, if the markets are largely random, how can you make money? And I said, I don't have a clue. That stimulated all sorts of things later on about how they do. Well, it's just because it's random doesn't mean you can't set yourself in a position where your reward is twice as big as your risk, or your position sizing is important in that. Yeah. I'm sure those were the answers they wanted at the time, but I didn't have that.
But Ed was that first moment where you had your how much light bulb. That was the first moment with him.
I think so, yeah. My memory is always wrong, so...
It's not just your memory. I believe that'd be all of us, right? Memories are a funny thing. Hey,
memories are sort of made up.
Well, they're definitely not today anymore. There's the distant past, and who knows if we have it exact. I guess even if you have videotape, it still might be not 100% accurate. Let me ask, though, I brought up Ed Seykota. And of course, that you just this great how much moving into position sizing is such a great lesson for you to be exposed to. Is there anything else? I mean, I've had a chance to spend some time with him and at various points over the years. Is there anything else that struck you or that you really found interesting about your involvement with Ed Seykota? A very open-ended question, which can go in many different ways, and you might have more than one thought.
It was interesting because I think the first time I used him as part of our modeling, we did a video of the interview. The interview was about me asking him questions for about an hour and a half. And when I look back at the video, he didn't blink in the whole hour and a half. I don't know anybody who doesn't blink for the whole hour and a half. But I had somebody watching it later, and that woman said he was channeling something. And I always knew Ed did things like that. That was kind of interesting about him. He dabbled in all sorts of things that were quite different.
Can you elaborate about the channeling and the not blinking, and perhaps from your perspective with a psychological background, the not blinking, is that just intense concentration at play?
No, I think he was channeling somebody who was answering my questions. That's my opinion of what was going on. But Ed, let me put it in a different perspective, because talk about why Ed was one of the greatest traders ever, because he had a super edge at a time when he was maybe the only person who had that edge. He was a computerized trend follower. When I looked at his computer at one point, all his systems were written in assembly language. Like, nobody writes in assembly language, but I guess in MIT in the 1960s he was. So he was computerized trend follower with all these programs written in assembly language, who understood position sizing about as well as anybody. when nobody else was doing that, that was a huge, huge edge.
Yeah, we've talked about that. I've talked about that with him. It kind of gets to that point. Was it Gladwell that made the point in his one book that at certain points in time, this doesn't take away from anyone's genius, but there is a built-in advantage if you happen to come along at a certain point in time. And usually you can kind of look at certain years and say, gosh, that was the perfect time to be there.
Well, I mean, you can see a lot of these, like John Templeton, when he retired from Franklin Templeton in 1999, took his entire net worth and shorted all the dot-coms. And I'm going, if you know what was going on in 1999, those things were jumping as much as $50 a day in price. And to have a position in something like that and be able to stay the course on it was pretty amazing.
That was near the end of his career, yeah? I mean, that was...
Yeah, I mean, so there's certain things that people do like that that's a huge edge that comes out of nowhere, and they just get the insight, and, then they become one of the all-time greats and geniuses, but they were at an edge and had the right thing at the right time. Warren Buffett, for example, figured out how to buy an insurance agency and trade through the insurance agency and not have to pay taxes on what he was trading because he was an insurance agent. Again, a huge edge.
You're saying, for those out there that might be listening, that if they want to investigate how Warren Buffett has made his, 45 or 60 billion or whatever it is, it wasn't exactly through, quote, just buying and holding.
Well, he didn't have to pay any taxes on the money he got because he was trading through an insurance agency. That's a huge edge. He bought Berkshire Hathaway, which was an insurance company, and then traded through that.
Hey, while we're talking names, one of my most popular guests on this show in the last 4 years is Tom Basso. He's appeared 4 or 5 times. And I actually made an episode where I took all of Tom's appearances and turned it into like a 4.5-hour episode, which is probably my most popular episode. But I know you've had some experience with Tom, and I would love for you to pass along an insight, or, Tom's retired now, he's still trading, but pass along an insight about why he has had such an effect on a lot of people. He's a really interesting guy.
I know Tom really well. We did a number of workshops together. He was involved in a whole bunch of our workshops for 4 or 5 years. I actually helped. It was due to me introducing him to Jack Schwager that got him into the second market wizards. Tom was probably the most mechanical trader I've ever seen. He basically said, I'm a businessman first and a trader second. I look at everything. If it can be automated, if a human being does it multiple times, then I can automate it, and that's what I tend to do. He had 3 or 4 systems going. I really have no idea what exactly those systems were, but I remember at one point we talked about random entry. He plugged in random entry into his systems and still could make money with them, so proving it was all exits and position sizing. Tom was one of in my book on position sizing, all of the things of constant volatility and scaling out came from Tom. And probably the most interesting thing about him was his mental rehearsal, so one time he was in St. Louis running his company, and I called him on the phone, and Tom said, I can't talk now, Van, we're having an earthquake. I'm sort of thinking, St. Louis, earthquakes? And then later on, it turned out he was running his entire operation on his laptop and cell phone because they were having an earthquake drill. One of the biggest stressors for traders typically is when they moved, and Tom moved his whole operation from St. Louis to Scottsville, Arizona, and they didn't miss a beat because they rehearsed everything ahead of time. And then Tom had a thing. He developed an exceptional mental skill because for many years, I think he started as a teenager, he said he used to watch himself do things at the end of the day, and at the end of the day, he'd play a movie of his day and how it went. And because he did that every day, he soon developed the ability to both In NLP, we call it associate and dissociate. So most of the time, you're in your body experiencing it like you're in your body. But he could also be an observer outside of his body watching himself at the same time. He was the only one I knew of who ever had the ability. And then I discovered that if you did that technique of watching yourself or playing a movie of yourself every day, at the end of the day as a review of the day, that skill tended to develop. So those are a few of the interesting things about Tom.
Let me ask a follow-up to that. You mentioned that he said he was a businessman first and a trader second. Can you clarify what he meant there?
Again, this is the meaning I give it, which is not necessarily the meaning he would give it. So you have to assume that my interpretation is correct, which it might not be. Well, for one thing, he was a business owner, which meant he thought about it all as a business rather than as a trader. I actually have all of our super traders make business plans once they've done all the psychological work that's like 150 pages long. And it's kind of planning out everything, understanding everything. Another aspect of being a business is the fact that Tom could take off time for his trading and maybe do 2 workshops with me, helping me out, and know that his business would be running smoothly. That he could probably take a month off and know that the business would be running smoothly because it was a bunch of automated systems. So I think it was the way he viewed it. And I don't know if I explained it exactly, but that's probably the best I can do without being in his head and seeing the maps that he actually has for it.
I can remember the very first time, I've talked about this before, when I entered Bill Dunn's office in the mid-1990s, and there were no screens on anyone's desk. It felt like I was in a CPA office or a law firm. And I think that is also getting at the idea of it's not about, I think so many people, even if they're bright, so many people approach the markets and they have that extra kind of excitement thing coming from the greed side of them already, ginning up inside of them. But the reality is when you start to meet these people that have been the superstars, it's not about that in any way, shape, or form.
Typically, the superstars find some sort of edge that becomes rather unique for them and are willing to really exploit that edge. They basically understand that there's certain fundamental principles that are unique to success, and they also operate within those principles.
Van, let me shift gears on you a little bit and thinking about something Tom said about the simulation, but taking it more towards a trading simulation. So most trading simulations, backtesting, using computers, this is something that you are putting rules into code and testing its math. There's not as much room for discretion except at perhaps the initial choices. But it doesn't stop people from thinking, even if there is so much success in the automated or the systematic mindset when it comes to trading. Many people still, my feeling is, still believe that there are many market wizards out there that are sitting at the cockpit, so to speak, each day with a discretionary and intuitive, gene or extra something. Why don't you contrast? Because I don't know if you're a pure discretionary trader, it seems like to me it'd be very difficult to implement some of the position sizing methodologies that's in your work.
I think that part of it has to be you have to know when something's not working anymore. So that's definitely discretionary. For example, the market type may have changed. And that system, it's late 1990s, you're making a ton of money buying growth stocks, and you think you're a genius, and then 2000 comes along, and the market's totally changed, and you need to know that. If you're not aware of that, you're not going to do well. So you've got to be aware of things like when the market change. But I also think there are subtle things that happen within the market that make it so that things no longer work. So you like trend following. Let's talk about a trend following example. maybe in the mid-1990s, I have a guy who teaches at the Army War College, and he's got a master's degree in systems thinking, and he's got a Ph.D. now in decision-making under stress. And he developed a fairly simple mutual fund switching system where he had a basket of mutual funds, and every month he ranked them on their relative strength with over the last 6 months, 3 months, and 1 month, with the biggest ranking being the last month. And you'd buy the three strongest, and he'd put a 10% stop on them. And then at the end of the month, if he wasn't stopped out, he'd see if he should keep those or were they still the three strongest or whatever. That was a great system. It outperformed the market, at least during the time it worked. He'd never had a losing year. And, it's a pure trend following system. So you go, great. Well, the first thing that changed was suddenly mutual funds decided that they didn't want you trading in and out of mutual funds. And so suddenly his system totally died. He could not do it anymore. So he switched to ETFs. So ETFs were in the process then. So he switched to an ETF strategy where you had all these ETFs and this whole universe of ETFs. And then I think in Trading Beyond the Matrix, he put the performance of that system. And I think it had some losing years, but it still always outperformed the market and did really well. Well, if I look at the same system now, I can't even trade it because it's a fairly automated system. You just put in your orders once a month, you calculate it, you put in your orders, have a 10% trailing stop. Actually, it's not even a trailing stop, it's a 10% stop loss, and at the end of the month you're out, you're either switch or buy something else. But what happens now is if you look at the track record of now and you test that, you basically have at least a 20% drawdown with about 40 months to get out of it. So what's happened? Something's happened with lots and lots of people with big money doing things with ETFs that make it so that system doesn't work anymore. And there's a new version of it that works but requires a much shorter time frame. Systems stop working too.
Your passion today, Van, why are you doing this? Why are you still doing this? Why are you so passionate about what you do at this stage of your life? Why have you not stopped? Why have you just not gone out and smell the roses?
Well, I turned 70 this year, and it kind of goes back to, people used to say, well, if Van knows so much about trading, why does he coach and why does he make money trading? Well, that makes the assumption that the be-all and end-all in my life is making money. It's not. My passion is helping other people, especially other people make transformations that change their lives. Our metaphor for our company is transformation through a trading metaphor. That's kind of our mission. Our whole company thrives on it. We're always getting letters and phone calls from people saying about how you changed my life. So I get a lot of joy out of that. I see no reason to ever retire until maybe I become senile or something, because I love what I do, good at it, and I help a lot of people, and hopefully we'll keep doing that.
You just mentioned that so many people, you might get feedback, they say, hey, you really changed my life, and thank you for that. And that's a great feeling. I hear that sometimes in my world. Who changed you early on? What was the triggering moment? Was there one triggering moment? Was it a series? When was the change? I mean, roughly how old were you? How did you start to go down this path? Somebody probably had to give you something in terms of an insight or an inspiration to send you down your path. How did that happen?
I would say I started this business around 82. I would say around that, it's fuzzy as to what exactly happened, but around that period, it was probably the low point of my life, and I was, psychologically dead. But I remember going to a religious science church, and I remember a man, somebody asking the minister, or the minister talking about a situation where he said, well, I don't believe in God. And the minister said, well, what kind of God don't you believe in? And they talked about this man up in the sky who passes judgment on us and decides whether you're good or bad and whether you're going to go to hell or heaven or whatever. And the minister said, well, I don't believe in that kind of God either, but maybe there's something else. And at that point, I kind of found A Course in Miracles, and I didn't really understand everything about what A Course in Miracles said, but it totally matches up with what I'm, personal responsibility, about how it's all illusion and you create it through your thoughts. I actually went through A Course in Miracles the first time, which took me 4 years, and I never got that it was all made up. It took me second or third time to figure that one out, even though it's very obvious in there. But it was through that process of really working on myself, as I started to find myself that way, and as a mission developed of, in order to, my job is to help transform traders through a trading metaphor. I always had the belief that I couldn't take any people or help transform anybody any further than I managed to transform myself. It has been, and it still is, a lifelong goal to transform myself. For example, I'm currently taking a Siddha Yoga course that requires me to go to India once or twice a year. And they say in about 10 years I'll become a Siddha Yoga. We'll see that when it happens. But interesting things have happened as a result of doing that. And it's certainly helped me be able to produce transformations much quicker than they were 10 to 15 years earlier than this. I can't put it on a specific thing on what happened, but that, in a nutshell, is kind of what happened.
As a recent person practicing yoga the last 4 or 5 years, maybe we'll save for our next conversation. We'll go pure Eastern, and let me pick your mind on that particular topic. I have a feeling we could talk for a very long time on that alone.
Well, it can be kind of interesting. I mean, I understand, for example, the reason things are all made up is because, and the reason a major transformation is necessary is because our brains get shaped by language. And language basically has the format, almost all languages have the format of subject, verb, object. So they get you, once your brain is shaped to think that way, then you assume it's real. There's me, there's you, and there's our relationship. And there's me and the market and my relationship with the market. But that's a function of how we think. I think the only language I know of that doesn't have that relationship is Sanskrit. And Sanskrit doesn't have an I sense.
Interesting. For those of us that grow up in Western traditions, that is a dramatic shift.
Yeah, there's no sense of I in Sanskrit. In fact, early Sanskrit words didn't have any meaning. It was the sound and the impact of the sound that had on your body in creating things. And it was only later that words were given meanings. Didn't mean to inject all that at the time, but it came into my head, so I said it.
No, I think my intuition was right. I think our next conversation perhaps goes right down this path. Van, in the short term, though, the near term before our next conversation, iitm.com is where everyone can find you, or is it vantharp.com as well?
Vantharp.com is probably easier to remember.
I always remember the IITM from back in the day. I don't know why I've never forgot it. I don't remember the Van Tharp, but I remember the 4-letter one. There's not many 4-letter domains out there. I actually own one 4-letter domain myself. There's not many of them out there that are available, at least. Yeah,
and as we said before, my book, Trading Beyond the Matrix, is basically free. You have to pay postage, which is media mail if you live in the United States. It could be expensive if you live out of the United States. It's free. It's a really good introduction to what we do.
Van, I thank you for taking the time again today. I always appreciate it.
It's my pleasure. Yeah, I always enjoy it.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.